What is up, guys? This is Stock Market Education, and today I'm revealing my top 6 biggest positions today. In this video, I'm going to show you guys exactly how many shares I have in each position and exactly how much these positions have earned. Make sure to annihilate that like button, and if you're new to the channel and want to learn more about stock market investing, make sure to subscribe too. But first, let me show you guys a comparison between my portfolio and the SPY, which is an S&P 500 index, to show you guys how I compare to the overall markets. So here's my portfolio's price chart over the past 3 months, and you can see that we've struck gold in the past 3 months, baby. 35.6%, while the SPY went up 15.73% during the same time period. Now, a 35% gain in 3 months is not normal, and to be frank, it's not sustainable. And if anyone's trying to sell you a stock course online, well, they'll tell you that their strategy will generate anywhere between 2 and 5% a week. It's not true. Every now and then, yes, you're going to have crazy gains in a short amount of time, but most of the time, no. So let's zoom out further to the 1-year price chart to see, because this will smooth out all of the short-term portfolio volatility. And we've received about 22.72% in gains, which is comfortably above average for me. And if we look at the SPY over the course of 1 year, we can see that the SPY went up about 8% or so, which is about the average for the S&P 500. So in other words, we've nearly tripled the S&P 500 over the past year. And it's not like this was a crazy year for the S&P 500 either. This was just an average year for the SPY. And I want to be very transparent when I say that my portfolio is very volatile and it isn't suitable for everyone. And it's not suitable for everyone because there are snapshots in time where I underperform the market severely. It's always important to measure how risk averse you are and to always do your own research. Now let's get into my top 6 positions. So my biggest position right now is Tesla, and it makes up about 20% of my entire portfolio. And if you saw my recent video, you know that I sold some Tesla shares. However, I still own about 2.92 shares of Tesla with an average cost of about $730 per share. And we have about $1,927 worth of unrealized gains, and I have no motives to sell this position anytime soon because they're on the verge of becoming a member of the S&P 500, and they have Battery Day coming up where Elon Musk hinted at some very important information and some rumors around a 1,000,000-mile battery. I'm comfortable with my position in Tesla, and if the price falls, I'll definitely take advantage of it, but at these levels, I'm not looking to buy. Next up on the list is a fund with the ticker symbol XLK, and XLK is a fund that tracks the technology sector of the S&P 500. And right now, we have about 20 shares in that fund with an average cost of $88.45 per share with $386 of unrealized gains. And looking into XLK's top 10 holdings, you can see that their holdings include Microsoft, Apple, Visa, MasterCard, Intel Corp. And as far for risk reward rating, they received a low risk, high reward overall rating, and I like my position in XLK so far and don't plan on selling this anytime soon. This is an easy money index fund that I think will beat the S&P 500 over the long term. Next up is Revolve Group. Now we own 108 shares of Revolve for an average price of $14.60 per share, with $126 worth of unrealized gains. Now, for those of you who don't know, Revolve Group is an online fashion retail company that created trend forecasting algorithms to be able to create future trends in fashion, giving them a huge and unquantifiable advantage. So I've owned Revolve for about 8 months now, and it hasn't really done much for me in 8 months, mostly because all music festivals are canceled, and that was one of their big money drivers for them. However, I have no intention to sell this position anytime soon, because at the end of the day, they're an online company for fashion retail, and this is the only retail company that I would even think about purchasing. And I have no intention to sell this position anytime soon, and if it goes down below my cost average, then I'll definitely be picking up some more shares. My 4th biggest position is Nvidia, and we own 4 shares of Nvidia for an average cost of $357 per share and an unrealized gain of $240.56. And if we take a look at Nvidia's key metrics, we can see that this is a very cash-rich company. They expect to report about $10.92 billion in revenue, with about $4.1 billion trickling down to the bottom line. And they have $10.9 billion in cash compared to $2 billion in debt. And they have a very strong and competent management team. I like chip and software companies because they usually have high gross margins, like in Nvidia's case, and I have no intention of selling Nvidia anytime soon, and it's going to be very fun to see where the stock price goes in the next 2 to 3 years from now. Now, the fifth biggest position in my portfolio is Amazon, and we don't even hold an entire share of Amazon. We hold 0.43 shares of Amazon with an average cost of $2,588 with $240 of unrealized gains. And Amazon has a massive growth opportunity in front of them because of their AWS, and looking at their AWS segment, we can see that sales increased 33% year over year. And their operating income went up 38% year over year. And when you take that into account, along with the forecast that global cloud computing market is expected to grow from $296 billion in 2019 all the way up to $657 billion by the end of 2025, Amazon is a money stock in the stock market. However, looking at the valuation right now, I would not be buying Amazon stock at these prices, and I expect Amazon to fall within the next month. And the sixth and final position I own in my portfolio is the SPY, which is a cheap index fund that tracks the S&P 500, and I own the S&P 500 because I look at the SPY as an almost riskless investment that everyone should make in the planet. And just for some history of the S&P 500, since its inception in 1926, the S&P 500 has given back an average return of about 8% per year. Which doesn't sound like much at first, but think of it this way. If you invest $10,000 when you're 25 years old into the S&P 500 index, that $10,000 would have appreciated to over $400,000 by the time you're 68 years old. A pretty nice amount of money to have for retirement, and not including your 401k too. And taking all those wonderful things into consideration, I'm planning on selling my shares in the SPY only if we see a reversal in the markets, and putting that cash on the sideline until there's another buying opportunity for Tesla or Amazon or Nvidia. And that is my $19,000 portfolio. Thank you guys for watching the video. Let me know what you guys think down in the comments section below. Make sure to click that like button and subscribe if you haven't already, and have a great day. Bye.